Oh, hi friends, my name is Sunny Ahuja and welcome to Sun Stocks. Today I'm going to be talking about a company that has gone from being a small cap to a mid cap in a relatively small period of time and is well on its way to becoming the next large cap. You know what this means?
I am a magnet to money. Money loves me.
If you're finding today's topic useful, do not forget to hit the like button below. So, let's start. This company has given a mind-boggling return of 80,000%. Yes, you heard it right. 80,000%. I first came across this script back in 2012. That time the price of this script was roughly 60 rupees. It had actually moved from 1.5 rupees in 2006 all the way to 60 rupees in 2012. That's a whopping 4,000% in just 6 years. For 2 years, the script remained relatively flat, which means it just loitered around 60 rupees from 2012 to 2014. As rightly pointed out by the great Warren Buffett, the stock market is a vehicle which is a transfer of wealth from the impatient to the patient. Sure enough, the company moved all the way from 60 to 1200 by 2019. As some of you might have already guessed, this is none other than the now famous Vinati Organics. As you can see, the company is majorly into 4 products. ATBS, being the major revenue contributor, also contributes the maximum to the profitability. These products are used in a variety of industries, right from oil and gas to paper, cosmetics, pharma, and so on. Vinati is truly a diversified company. There is a lot to like about Vinati. The company is completely debt-free, which means it has zero long-term debt. The promoter holding stands at a very high 74%. It is also interesting to note that recently the promoter group, Suchi Chemicals Private Limited, has been acquiring shares from the open market. The last time I remember promoter buying shares from the open market, the share price more than doubled from 900 to 2,400 pre-split back in 2019. The fact that the promoters have a high percentage of shareholding is no surprise that the company has been paying increased dividends over the years. It also enjoys good profitability, as can be seen with the increase in PAT in this chart. Vinati Organics enjoys a very high ROCE. Now the ROCE is a very important metric. What the ROCE tells us is what kind of return Vinati has been able to generate with all the capital that it employs. As a benchmark, the ROCE should be at least twice the interest rate offered by banks. Now as far as I can remember, the banks were offering 6% of interest last year. Even if we more than double that to 15%, we can see that Vinati's ROCE is comfortably placed above that level, implying that the company is making use of its capital resources very efficiently. You would be better served to look at ROCE as opposed to PE, which a lot of people give importance to. Now we have to understand that PE is a backward-looking ratio and really doesn't play much of an important role in predicting future stock prices. Also, Vinati is number 1 or 2 in the world in the products that the company manufactures. For its main products, namely ATBS and IBB, the company commands close to 60 to 70% of the global. How many Indian companies can you and me think of that are number 1, not just in India, but in the entire world? So why has Vinati been successful? Ever since Vinati joined Vinati Organics back in 2006, she used technology to overcome the obstacles the company was facing and turned the company into the cheapest and the highest quality supplier of its products. Cheapest and highest quality? How is that possible, you may ask? Well, as mentioned before, technology was developed with the help of France and some well-known Indian labs to improve the quality of the products, which were later deemed fit for exports. In addition, using IB as a raw material for ATBS has also helped Vinati in keeping the raw material costs down compared to its competitors. Finally, Vinati has been able to make use of waste discharge from producing some of its products to make newer products, thus making it a zero waste discharge company. This has resulted in considerable market share gains, especially in its main product ATBS, where Lubrizol, its competitor, which had a 15% market share, exited back in late 2017. Fortunately, Vinati was able to capture the entire 15% market share that Lubrizol vacated. This led to margin expansion till 1920. However, Vinati does expect the margins from ATBS to normalize going forward. So, what next for the company? Vinati has already started the production of a new specialty chemical called butyl phenol. Not surprisingly, IB, which is a chemical that Vinati already produces, is a raw material which is used in the making of this product. And just like most of their other products, Vinati is the sole producer of this chemical in India. Initially, India will be a fairly large market for this chemical. However, the global market size for this chemical is fairly large, and I do expect Vinati to start exporting this chemical within the next couple of years. Phenol is another chemical used in the making of butyl phenol. In my next video, I will be covering another company that has recently become the largest manufacturer of phenol in India. So don't forget to hit the subscribe button and the bell button right next to it, and you will be informed as soon as that video is out. Vinati is currently working on 7 to 8 new products. Rest assured, they will be bringing either 1 or 2 of these products into commercial production, which they feel would be world leaders just like their other products. With the help of butyl phenol, where Vinati is expecting a revenue of close to 450 crores once it goes on full steam, a 15% capacity expansion at its 80 BS line, which was undertaken recently, and the help of 1 or 2 of the new products, Vinati is expecting to double revenues as early as 2023. Also, Vinati has mentioned that the current medical crisis is not having much of an impact on the demand of its products. In fact, if anything, the demand for its products is actually moving up. Yes, the company was closed briefly from 26th March. However, the company has managed to reopen as of 28th April, and both its plants in Maharashtra are up and running. Also, China has more or less recovered from the medical crisis, and believe it or not, China is actually a fairly large customer for Vinati Organics. With international companies looking to rework their supply chains in the midst of this crisis, Vinati has all to gain and nothing to lose. As manufacturing in India increases over time, I expect a greater demand for Vinati's product, as more economies will be inward looking post this crisis. So, where are we now in terms of the share price, and what should we do? Lately, Vinati has corrected and is sitting at a price of 870. Based on the current market price, the share currently trades at 27 times current year earnings and 17 times 3-year forward earnings. Assigning a conservative PE of 25 as opposed to the 3-year average of 37.5, we come up with a target of 1260, implying a 45% upside from the current market price. Vinati seems to be a sound investment, and investors should use the current market correction to buy into the stock and add on declines. That's it for today. Thanks for watching, and see you soon.